So where do we begin? Where do we begin, guys? So I want to continue with this candlestick video because I think the previous video I might have gone a little bit overboard, and I'm thinking maybe after sitting down and reflecting properly, I'm thinking maybe some of you might have found it hard to understand because the way I trade my candles price, I made them black, or basically say there are no colors, because I mostly focus on the bodies and the wicks, or should I say the bodies and the tails. These are the tails, wick, wick. You should know these things, man. This is a wick, that's a wick, that's a wick, that's a wick. This red body is a sell body, and then this is a buy body, right? This is basically a structure of a candlestick. Let's just look into this. I don't want to dwell on these basics, but let's just quickly pass through this thing, because the core behind my trading system, after risk management, psychology, then there's the strategy. The core behind the strategy is the candlesticks, right? The candlesticks are of utmost importance. You need to really understand how to read candlesticks, right? You need to understand how to read the open, the close, the bodies, the wicks. You need to understand what are those things telling you, what happened in that previous day, what happened in that previous hour, right? Once you know what happened in that previous hour, then the probabilities of knowing what's going to happen maybe in the next few hours or in the next few days are higher, right? It's not 100%, it's probabilities. We trade in probabilities, guys, because there are losses. This is why risk management, I place risk management and psychology higher than the strategy when it comes to my specific trading system, right? Because it's how I trade. I know and I've accepted that there are losses in trading, which every consecutive trade that comes, there's a, we're going to talk about this on the risk management video, but basically risk management and the psychology behind trading are very important. They are of the utmost importance. But when we're talking about strategy, these you need to understand how to read candlesticks. It's not necessarily about, as I said in the previous episode, right? It's not necessarily about patterns, right? It's not about the names like bullish engulfing, hammer candle, morning star, shooting star, right? It's not about those names. It's about what is the candlestick telling you. What are the previous 4 candlesticks telling you? 5 candlesticks telling you? What is the previous candle telling you exactly? What happened in the market? Who stepped in? Who stepped out? Right? We are reading that kind of information. We're reading what exactly are the banks saying. I don't know. Maybe should I make this video part one? I think maybe we'll make this video part one. But basically, these other videos are supposed to be part one. But anyway, I hope you guys won't be confused. We just I'm sure some of you will reach this point. Some of you will reach this point, right? So basically, what we're looking for when we're looking at candlesticks, we are looking for information, right? Information telling us who stepped in, who stepped out. And when we're talking about who, we're talking about the big banks, the hedge funds, those who basically control the majority of the money in the whole market or the whole industry. All right, or in the specific asset or in the currency pair. Like for example, with Euro USD, we know it's the big banks and the big institutions that pull most of the money, more than 50% of the money. But anyway, since this is the structure of a candlestick, right? This is a bullish candle. Here there are colors to emphasize the bias, or to emphasize the direction in which the candlestick is headed, right? Bullish candle. I think it's in green or whatever. I'm colorblind, guys, so forgive me for that. So it opened here. Remember what I was saying in the previous video? It opened here, it closed there, right? It's a bullish candle. But the candle for me is not a good candle. I would have preferred if this week, maybe if it closed up there. This week, this tail at the top was small and this tail at the bottom was long. That would be a strong bullish candle for me. When it's like this, where the tails are equal, to me, this is a sideways candle. It doesn't matter with the color, to me personally. But since the body is this big, then we can say it's a bullish candle because the body itself is big. But so, same thing with the bearish candle, the red one. So, let's see. Should I change the colors? Let's just switch the colors. Can't believe I even forgot how to change these colors before. Which color? Let's use this one. Nah. Now let's not use green. Should we use the same colors? No, let's swap the colors. Let's use this one for that. And then over here, the bullish candles. For the buy candles, let's use this color. Right. The buy candles, the sell candles, right? Here they use different colors. Now you understand the structure of a candlestick. You understand the structure. There's an open, there's a close, then there are the two tails, right? Where there's the high and then there's the low. The two tails or the two wicks. We call them a wick, right? But for the sake of making things understandable and basic, we're gonna call them tails. So we were on Euro USD. Should we go to US30? No, let's continue with EU for now. Then we will move on to US30. Let's see. Oh, that's good. We talked about market structure in the previous video, so you have to watch the previous video too. I'm gonna do a video on market structure itself, but I briefly touched on market structure on the previous video. Basically, high highs and high lows. For example, over here, this is a high, a lower high, a lower high. Let's go in closer so you can see it properly. A high, lower high, lower high. This was a bearish structure, even though it's a pullback, right? It's a retracement, but this was a bearish structure. So if we're in this kind of situation, let's say we're here, right? Some of you might have been buying here. I understand you are willing to take the risk, and it is a good pattern as well, but forget about that. There is this, we touched this. What is this key level? 1085, right? Yeah, it's 1085. Remember the psychological levels, the investor levels. We went to 1085, we rejected. 1085, we rejected. Then 1085 again, we rejected over here. But personally, yes, I would have taken the trades because it rejected 3 times, and you can see these weeks, it is 1, 2, 3 weeks all rejecting in this point. What this thing is telling me is that sellers are failing to breach this level, to go below this level. To me, when I see this in a bullish structure, it's clearly telling me then there's a higher probability that price wants to go upwards, right? It wants to, but it's not yet confirmed yet. It can continue downwards, but it's not confirmed. So after this candle, and then when we got this strong momentum candle that broke the previous lower high right here, can you see this? It opened over here. Remember the structure of a candlestick? This was the open, right? It rallied all the way downside. It rallied all the way downwards, which means sellers pushed price down, but then buyers stepped in and pushed price all the way up. Remember what I was telling you guys with this structure? I would have preferred it to close a little bit higher. We got this right here. Can you see how high it closed? Look at the wick. Look at the tail at the top. This is a bullish candle, right? You can see the color. The tail at the top is smaller than the tail at the bottom. The tail at the bottom is huge, right? But the body itself is massive. It's an engulfing. It engulfs, meaning it covers all these candles. These candles on its own can cover all this price action right here, right? So what this is telling us, this candlestick, right, is telling us that it engulfs all these candles. It can engulf the previous candle. It is a momentum close. It is a huge tail at the bottom, meaning sellers try to push price down, but buyers ended up closing price higher. They end up pricing it higher. So what this is telling me is that there's a higher probability that buyers are stepping into the market now, or they've stepped into the market. So there's a higher chance that we are going higher. So the next day after this close, you would have been looking for buys. This is when top-down analysis comes in, and this is when you step down into the lower time frame, whether it's the 1-hour time frame, 15-minute time frame. That's 10 July, right? I think it's 10 July. Let's see. I have too many lines, bro. I should delete these lines. 10 July. Then let's clean this chart, bro. Let's clean this chart. Wow, I really don't have indicators. 10 July. The 15 minutes is not gonna reach July. I don't think so. Let's go to the 1 hour. It will take too long for me to go there. June, July, August. Where's the 10th of July? Let's see. We are looking for a buy, right? On the next day after the momentum candle. January. Where am I now? I'm now in January. April. May, June. I deleted it, but it's 10 July, right? The 10th of July, right there. That's 9 a.m., right? Right there. It was the 10th of July. This is the price action that formed that momentum close, that day where we got the momentum close. Here's the price action right there. Wait. Where's this thing, man? Come on. I'm down here. Why is this thing so hard to edit? Is it a sphere? There's a circle, a rotated circle. But anyway, I'm sure you guys understand this price action right here from the 10th of July, 12 a.m. 12 a.m. right from here going down here. This was the rally. This is the previous high, right? This is the previous high right here. Let me plot it properly so you guys can see it. This is the previous lower high. Can you see the rejections right here? The rejections. My God, why am I putting a vertical line? I wanted to put a horizontal line. Where is it? Let's zoom into the price action. There it is. Can you see this is the high, lower high, lower high. This is the lower high reaching that we spoke about. This is where price broke that lower high reaching right there. Can you see it? I'm sure you can all see it. We are on the 1 hour time frame, right? So 1 hour time frame in the morning. This is what happened in the morning. There are some people who could have taken the trade off. This is 9 a.m. pre-London session. So since it's 9 a.m. in South Africa, UTC plus 2, right? UTC plus 2 based on this, the time zone on TradingView, right? So you would have taken the trade 9 a.m. You would have taken it there. You would have taken it after this momentum close right here if you wanted. But this is not how I enter it. But this is the basic way of entering, and you can learn this way of entering trades and use a wide stop loss. Don't use a tight stop loss, and then make your stop loss maybe 20 pips or 15 pips depending on where you entered. Let's say maybe you entered at 20 pips right there. You can even make it 30 pips. You can make it 30 pips, guys. Remember that. Do not use a tight stop loss. The more experience you gain, the tighter your stop loss will be. Because look at that. If you use the tight 20 pip stop loss, you would have made a 1:7, 1:6 risk to reward ratio. But that is huge. That's top-down analysis. We got the bias, we got the direction from the high daily time frame, right? We got the alert that okay, now it's time to start looking for buys from the daily time frame candlestick. Then we step down to the 1 hour time frame. We are looking for an entry pattern. For example, over here, this is a double bottom. Double bottom. It went down, rejected, it came back down. You could have said that's a double bottom. You could have bought it, profit, right? Let's use another way. Let's go to the 15-minute time frame, right? Let's say maybe I want a more precise entry, right? 10 July. Oh my God, is the 15-minute time frame gonna reach that point? I didn't even pay for TradingView this month anyway, so let's go to 10 July. October. Nah, it's not gonna reach July. I think it's gonna end on August. But let's see, you never know. September, no, it's not gonna reach July. But anyway, that was 10 July. What about MetaTrader? Does MetaTrader reach 10 July? What is this? December, November, 28 November, October. Is it gonna reach September, August? Let's see, 10 July, is it there? And that's 25 July 2010. Bear with me, guys. I'm looking for 10 July. So you can fast forward it until I reach 10 July. Right? That's 10 July. Right? Somewhere there. There's the 15-minute time frame, right? There. Is it even gonna zoom in? Let's try. Let's see. I wanted to see if there was some sort of entry signal. Where there is right here. If you entered down there, the stop loss would have been tighter, right? Double bottom. That double bottom is a lot clearer now. The stop loss would have been 15 pips. It would have been tighter. You would have made a lot more, a bigger risk to reward ratio. And then, is there a fair value gap? There's no fair value gap. I think the fair value gap was probably on the 5-minute time frame. Let's see. There's one down there, but it didn't come back to retest it. But there is a fair value gap up here, right here. So if I was going to enter it somewhere there is a fair value gap right here. It was retracing. It did that. It created a fair value gap right there on the 15-minute time frame. Broke the previous lower high. I'm gonna talk about this on entries, guys. This is a little bit more advanced. This is the ICT thingy, right? So you would have entered it there, maybe let's say 20 pips stop loss near the previous low. Then you would have made 100 and something pips profit. So Euro USD is very profitable. I'll tell you guys that Euro USD is very profitable. You can make a lot of money from trading just Euro USD if you're smart enough. Don't follow the trends that everyone is trading Nasdaq, so let me also trade Nasdaq as well. No. How long have I been rambling? So what I'm basically saying is stop following trends, right? Euro USD, you can make a lot of money just trading Euro USD alone. But for all you indices lovers like me, of course, I love indices. But the reason why I also trade Euro USD is because I know how much money Euro USD is. There was a fair value gap right here. So it might be covering this fair value gap and going back higher. There's a possibility of that. I don't think so. What's the weekly time frame saying? But it's December, and December is quite unpredictable. But anyway, I'm now analyzing instead of talking about what I'm supposed to talk about. Let's check US30 then. The Dow Jones Index. Now let me check O-Winder. Where's O-Winder? Because I know the FXCM one, there's a lot of lines on it. Let's check the O-Winder server. Now this is where this system really flourishes. Like it really flourishes with US30. Also Nasdaq. It really works with US30 and Nasdaq. So as we look to begin now, let's go back and talk. Let's now talk about US30, guys. I think I caught this trade. Remember, right? So with US30, it's really quite simple, guys. With US30, it's a lot simpler than with Euro USD. It's the same thing, but there's a higher chance that it respects those candlestick patterns with US30. By candlestick patterns, I'm not talking about those names. Let me delete these lines. These lines are gonna confuse you guys. Let's delete these lines. Right, let's go away. Let's start. Should I start here? Right, let's start here, then we'll go there, we'll go backwards. Let's say over here, there was a key level right there. Support. It bounced twice right there. Rejected twice. There's a level there. Over here, there was a level here. It rejected there. Came back, it rejected. It came up, it rejected, right? Then let's say price action was here, right? So overall, we're in a bullish market. Why? Because this was the previous low, but price rallied back up. And if you know indices, once indices start running like this from a bottom, there's a high probability that they will continue running upwards. That's the annoying thing about them. They really don't retrace that much. That's why I prefer most forex pairs, because there are a lot of retracements. More retracements means more opportunities to enter trades. And as you can see, this is swing trading basically. So there were a lot of bulls pushing price higher. There was sideways movement right here. Price pushed down, right? It pushed down, but it was rejected a little bit right there. Even if you started selling there, if you wanted, you might have made a loss, but risk management, risk 0.5% only, or risk only 1%, right, of your capital. Let's say maybe you lost 0.5%. Then the next day, what happened? You get this momentum close right here. Remember, I was talking about momentum candles. I'm not going to talk about it again. You got this momentum close, right? The next day, what is this candle telling us? It's telling us that the next day there's a higher chance that price will be distributed upwards, right? Power of three, the distribution phase. There's a high chance that price will be distributed upwards, or there's a high chance that the next coming days price will go higher. Just by reading this one candlestick and looking at structure, right? Reading this one candlestick, looking at the structure. We're in a bullish structure, and we rejected at this level as well and closed with a momentum candle. We went back above 34,000 level. Remember the psychological levels. We went back above the 34,000. There's 34,000 right there. Right there. That's 34,000. We went back above, created a momentum candle. The next day you would have been looking for buys. That's when the next day you step down to the lower time frame. So there's the 1 hour, whether it's the 15 minutes, whether it's the 5 minutes, you know what you're gonna do if you have your entry system, right? If you have your entry system, if you have your entry strategy. So from there, I started buying and buying, and you know indices, right? You know indices. Let's say with US30 you would have used maybe 100 pip stop loss. 100 pip stop loss. Even entering at the market open, you wouldn't have been taken out. I'm sure of it. But with US30, sometimes you have to use 150 pips if you're swing trading on a high time frame. But I think 100 pips is good enough. I've used a lot of 100 pip stop losses when I didn't feel like babysitting the chart. Can you see if you entered at the entry, if you entered at the open of the next day, price would have went down and down and down, but it wouldn't have taken you out. There would have still been a good gap of price action right there that wasn't filled for you to be taken out. But look at the risk to reward ratio. The risk to reward ratio already with these 2 days, in a matter of 1, 2, 3, in a matter of 3 days, you would have caught a 1:8 risk to reward ratio, meaning you have to lose 8 trades in a row to go back to break even. That's how you trade, guys. You trade thinking about the risk and thinking about the losses. How many trades should I lose before my account is blown? How many trades should I lose before I go back to 1%? How many trades should I lose before I go back to break even or to zero? Right? So you understand the mentality. Trading revolves around risk management. It's about managing risk because there is no strategy that is 100% win rate. That's one thing that people need to understand. So rally upwards, 1:8 even here. That's why I'm still trading US30. With US30, I take every single opportunity. If I took a sell right there and I took a loss, I wouldn't have cared. I would have taken the buy after this. Let's say I took a loss here, wait for 1 day. After that 1 day and we got this close, then the next day I would have taken that trade. I got a 1:8. I've covered this loss, which means I'm now 7% up. Understand the gist of it, right? You understand. You will take losses. You will take those losses, right? With US30, you can pay attention to individual candles, guys. You can, because it's indices. Indices are a little bit different from forex. Sometimes indices, sometimes they don't follow market structure, bro. Sometimes they can just rally without forming higher highs and higher lows on the daily time frame. For example, over here, it rallied down, went up, it came down, created a double bottom, it went up. Like it kept on going up and up and up for days without even forming a small pullback or small retracement. That's just how indices are. For example, even in the rally that we're in now, and once I see something like this, I become worried. Like, okay, there might be more buying coming in this coming week. There might be, but it's a weak setup. For me, it's weak, right? It's showing me that this trend it's exhausted. It needs a pullback or it needs a reversal or whatever. It's exhausted, but there's a higher probability buying than selling, but there's even a higher probability waiting and not doing anything in this kind of market. But if you're in a rush, there's a higher probability buying than selling. But in this kind of market, you are highly likely to take a loss. You are highly likely to take a loss. But when you're trading something like US30, you guys need to understand you are going to recover those losses. So don't be afraid to take those losses. You are going to recover them. When it comes to trading US30, focus on one asset or focus on 2 assets, right? For example, with me, technically I only focus on US30, but since I'm impatient and I want more trades, I also added Euro USD, and then I added GBP USD as a buffer for Euro USD, right? For example, if I miss an entry on Euro USD, sometimes in most cases, they're headed in the same direction. So I will most likely get an entry where on GBP USD, because they may be going in the same direction on the daily time frame, but they won't go at the same pace. In the 15-minute time frame, Euro USD at 9 a.m. might rush upwards, but GBP USD might do a pullback or a retracement. I'm sure you guys understand what I'm saying. So if I miss that one, I might catch the other one. That's why I treat them as a single entity. It would be the same thing with US30 and Nasdaq. I would treat them as a single entity, but I'm not interested in trading Nasdaq. I'm just not interested in Nasdaq, right? So let's see. Over here, there was a sell right here. There was a sell right here after this candle. Because you can see there's a low right here. Price came back, it broke below this previous support level. It closed with a momentum. This is a momentum candle. The wick at the top might be smaller than the wick at the bottom, but this candle, the body is massive. The body is really massive. It's showing that they're really dumping, like they're really dumping price right here. Once they dumped price, the next day you have been looking for a sell. Let's say you're looking for a sell, 100 pips again right here. I think Euro USD, US30 is the one where it'll be easy for me to give you guys a stop loss unit that just use 100 pip stop loss. Just use 100 pip stop loss, right? 100 pip stop loss, and you won't go wrong. Okay, 100 pips, but in some seasons you might need to use 150 pips. In some seasons, it was a 1:4 risk to reward ratio. But knowing me, I would have got an entry like on the 3-minute time frame, but I don't advise you guys to do that until you become a little more experienced and have some consistency. For example, right here, 1:4 movement after this signal candle right there, and we're in a sell bias. Remember, low. That's a lower high from here. High, lower high. It formed a lower high right here after this candle. So you would have taken a sell right there and sold. Even though I wouldn't have cared about the structure anyway, I would have focused mostly on the candles and taken the risk. But for you guys who are beginning, pay attention to, here's an example of a loss. Here's a loss right here. For example, can you see here? This was a buy signal right here. But the next day, what happened? There was this resistance was too strong for us. We would have taken a buy. It would have taken us out. It would have taken us out clean. That's a loss. That's a clean loss right there if you took the buys right there. Clean loss. But what happened the next day? After this close, they say after it took us out there, one day later, after this close, the second day, you would have started taking sells right there, or you would have taken sells after this candle. So it depends on you. Which one do you prefer? You would have taken sells after this momentum close, momentum, bearish engulfing, evening star, right? Whatever name you want to use. But with me, I just look at the candles. The candle, the body is massive. Massive body, small tails or small wicks. So next day, selling more than a 1:4 risk to reward ratio, probably 1:5, 1:6 risk to reward ratio right there, right? But as you can see, sometimes you wait days without a trade, guys. Look at right here. When is the last time I had a trade on US30? It's been 1, 2, 3, 4, 5, 6, 7, nearly 7 days without a trade on US30. 7 days, guys. 7. You wait a lot of time. You wait a long period of time without trade sometimes. That's why I end up adding things like Euro USD, because I can just switch my focus and focus on that. Here's another strong, what do they call it? Another strong sell signal, right? For example, over here, price pushed up, it rejected right there, this level. It rejected, came back, double top. You can say it's a double top, whatever term you want to use. Double top. It rejected. The next day you would have looking for sales. You would have been looking for sales if you wanted to, but you would have been hunted. If your stop losses were tight, you would have been hunted here. But even if you were hunted, you wait patiently, right? If you tried entering there, guys, and it took you out, you wait patiently. 1 day, nothing happens. 2 days, price runs down. 2 days of waiting, price runs down, right? It rallies down, it gets rejected. That's 2 days of waiting. There's still no trade. It gets rejected, but there's no signal of a buy or sell yet. You wait. On the 3rd day, price opens, it pushes up. This is the 3rd day. It pushes up. Buyers are buying and buying and buying and buying. And some people may be thinking, oh, it's time to buy. Look at this week. It's time to buy, right? People are buying and buying and buying. It stops them all out. They hunt all these sell limits and buy stops. Every sell limit and a buy stop gets hunted, right? Pushes up, then they rally it back down. This is the distribution. They distribute it back down and close it right there. crisp and fresh. That's what you call a strong sell signal. Look at how this body is right here. This body, look at the tail at the bottom. Such a small tail, guys. I don't know. This is just pure magic. I don't know if you guys are seeing these. I don't know, these things happen once after some days sometimes, but you have to wait, guys. Trading is a waiting game. You won't get trades every day. Even I'm still getting used to that every single day. But I'm now used to it, obviously, but I'm still adjusting to it, right? Huge, massive momentum. Look at this huge wick right there. That tail is massive, right? It means buyers tried coming in, but those sellers said, no, this is our market. It's our time to shine, right? After this close, the next day, it would have been a holy grail of selling, guys. It would have been a holy grail of selling. Look at even the accumulation phase was so small because they didn't want to give you guys enough time. You guys who have been stopped out here, your emotions are all over the place. Your emotions have been panicking. Oh, I lost. What if I lose again? Oh, I tried selling here. What if I lose again? Or what if it's a buy market? And that's what they want. They want your emotions all over the place. So that when this time comes, they just dump the price. They make the price tank. Look at how this thing tanked, right? This thing fell, and it didn't even give people an opportunity to get on the trade. That's what I hate about indices. I hate indices for that, bro. I really hate them for that. These things will run. These things, bro. If you have a soft heart, it'll really show you flames. These things are not for someone who's soft-hearted. They are for people who have a strong psychology. By having you cultivate a psychology. You build a psychology, guys. You build it. You understand losses are there. They are part of it. Sometimes when you're looking for the right entry, you will take a few losses in between. You might take a few losses in between while looking for the right entry. Rail it down. All this profit right here. This is one of the best assets to trade with this kind of system. I can guarantee you that. But you need to be willing to accept losses. You must accept a loss, right? You must be willing. Look at these phases right here. I know personally, I would have been taking 1 or 2 or 3 losses right there. But I know after this momentum candle, I would have still been confident enough to sell. I'm still selling, right? And after selling right here in this phase, I will recover all these losses from this sideways movement. After recovering the losses, I'll also make some profit as well for me to prepare for the next phase, right? That's how growth works in the market, guys. You will never have, what is that thing, the structure of highs and lows, right? When it comes to trading, right, this is how the market moves. The market moves like this. No, your growth and your profitability, consistency moves like this. Let me show you guys how consistency moves. How an equity graph that is profitable is supposed to look. You'll see these things on my FTMO account because I'm gonna document the FTMO journey. But I thought first let's release the strategy. This is how your growth is gonna look when it comes to money. You will make profit. You will take some losses. Risk management, guys. You need to always be ready for this phase, guys. That phase. Oh my God, we're still gonna talk about risk management. I really need to go into detail about risk management as well. But this is how your journey will look. You will go up, lose some losses, make profit. Maybe take 3 losses, 2 profitable trades, take 1 loss, profitable trade. Can you see how it goes? It will keep going like this. 0 goes 3%, back down to 2%, goes up 5%, goes back down to 4.5. It runs up 8%, it goes back down to 6%. It runs up 10%. That's how an equity graph goes. That's how consistency grows. It's not about luck. You're not supposed to rely on a lucky trade or on one winning trade. Right, you'll have those phases where we take losses, guys. Some days there'll be losses. Sometimes we'll just take those losses. Over here we might have made profit. Here you take some losses, you lose the profit you made here, you lose it all here, then you come back here, you make profit, then maybe you take a loss somewhere here, you come back, you make profit. Like, you need to always be ready for losses, guys. You need to always be ready. But some people probably don't want to be told that. So just continue with your 1 minute strategy. If it's profitable for you, that's your choice. But anyway, as you can see, there are a lot of opportunities, guys. A lot of them. There are a lot. I see a lot of buy opportunities, sell opportunities everywhere on the chart. It's everywhere on the chart. But it's hard to catch all these opportunities if you're afraid. I'm speaking from experience as well, guys. If you have fear, it's hard to catch these opportunities. And when it comes to profitability and making money in trading, it takes time. It really takes time. You won't just wake up and have Lamborghinis, Ferraris, and all that. But other people do it, so they do it on Instagram. We don't know how they buy them, but since they do it, that means it's possible. So if you guys learn from them, then you might have things. But anyway, let's go back to this thing, US30. Let's see. Over here, this was a horrible phase right here. Here they were just slaughtering people. How many days did this thing last? From the 10th of March until, for a single week, for an entire week, slaughtering people right here. That's why risk management is important. They were slaughtering people here. You might have been too afraid to take the buy there. You came back, but you would have still caught the buy after this candle. This candle, when it forms a higher low, and it has this beautiful price action. Look at the wick. It's a repetition of that price that I showed you before. Can you see how the market will always repeat these things, bro? It will always speak to you. These candlesticks will always speak to you. They will never lie to you. They will tell you exactly what is happening in the market. They will tell you what exactly are those big boys thinking. What are the big boys doing? What were they doing? You can see here they were hunting stops. They were hunting stops right here. A lot of stops were hunting at the start of this day, or even during the day. They were hunting a lot of these stops. But what happened at the end of the day, they decided after hunting the stops, this is the real direction of the market. We are going higher. That's how you read individual candlesticks, guys. That's how you read them. They hunted stops with this long wicket open there. They hunted a lot of stops, or is it sell stops? They hunted a lot of sell stops right there. Sell stops were hunted. After all this hunting, they decided, you know what, here's the real price action of the distribution. It closed upwards, a small tail at the top, a massive tail at the bottom because of the hunting. The next day, what happens? They give you a small retracement so that you won't get the opportunity to enter the market. Then it rallies upwards. You would have made the 1:3 trade for sure right there if you exited. But if you held, it would have came back trying to hunt you or take you out at break even. Still, this is still stop loss hunting right here. Take you out at break even. What happened the next day? There is no tail at the bottom at all. No tail at the bottom. This is why I said I hate indices for that. You need to be careful with indices. You need to take every opportunity that comes. You need to have fingers that are ready to pull the trigger. With forex you can relax. With Euro USD you can relax, take things slow. You'll get those retracements, those pullbacks. You'll get all that. But with this thing, sometimes you won't even get a retracement. Look at this. There was no retracement right there. It just ran upwards. It ran 1, 2, 3, 4 days running upwards. After all these days of hunting people, killing people psychologically, after all those days, then what happened? It ran upwards. These things, these phases, it really takes time to get used to this. Even I'm still getting used to this. These phases right here, these sideways phases, no one likes this. No one likes these phases. But this is why you need to have strong risk management. Right? Your risk management needs to be solid. So even if you take 2, 3 trades, 3 losses maybe here, you will recover all those losses right here and make even way more profit on top. Why? In preparation for the next sideways phase. Can you see here? Here's the next sideways phase right there. Hunting your stops right there. Then what happens? It runs upwards. I think the same thing is happening right now. US30 has a tendency of doing this nonsense, bro. It really loves doing this shit, bro. Where it's gonna hunt your stops. Can you see right here? Here they were hunting stops, bro. Sideways movement. When it's sideways movement, there's no liquidity basically. I can't say it's stop hunting. There's no liquidity, right? Sideways. Then all of a sudden, whilst you're sleeping, it goes boom. You're surprised, right? That's what they do. So some of us were always ready for that kind of nonsense, bro. We're always ready for that. But I'm also willing to let the trade pass. If it passes, it passes. We'll get the profit in the future. So I don't know what else can we talk about with these candlesticks. I think this thing is a little complicated. It's a little complicated for some of you people, but I'm really hoping someone is going to understand. I'm really hoping someone's going to understand. I really hate colors, but I don't like it when it has colors. I like to see only the bodies and the tails only, because I already know the direction based on the distribution and the accumulation. I already know the direction of the candles. Also, looking at the structure of the market, I already know that this one was a sell candle. I already know. But anyway, let's see. So that's it for this one. Then, what about Nasdaq? What's happening on Nasdaq anyway? I haven't opened Nasdaq in a lot of weeks. FXCM. What about Nasdaq? Oh, Nasdaq is a buy. Nasdaq is a buy setup right now. There's a nice little buy setup on Nasdaq this coming week. Oh, I should look into Nasdaq this coming week, and we closed above the previous high. Nasdaq is a nice little buy right there. Nasdaq is a nice little buy. Closed above the previous highs with this momentum candle right there. This candle confirmed the bias right there. As you guys can see, this is real time, right? This is the 11th of December on Monday, right? We are looking for trades for the 11th of December. We'll probably be out up there. So what we're looking at on Nasdaq right now, Nasdaq was hunting a lot of stops right there. Nasdaq was just slaughtering people, but those who took sells, they probably made something. Let me see, what stop loss does Nasdaq use? Is it 80 pips or 70 pips? Is it 100? No, Nasdaq is not 100. It is. Nasdaq is 100 as well. I don't like the risk to reward ratio sometimes on Nasdaq. I don't like it. Doesn't pique my interest. Nasdaq is way too many 1:2 risk to reward trades. Yeah, it's a 1:2, but 1:2 is better than nothing, right? So there might be a trade. Price tried to go downwards. Right? Tried to go down. What happened? Buyers stepped into the market and pushed price up, and we have a bullish engulfing candle. Let me put the colors back for you guys. Let me put the colors back. Which one is the buy again? Yeah, that's the buy. Then this one is the sell, right? Right, so you guys can see it now. There's the bullish engulfing candle right there. That's the engulfing candle. Close with a strong momentum candle. Strong momentum candle. Friday, you guys should have started buying Nasdaq. There was a nice buy. There was a nice buy opportunity because there was a massive accumulation right there. Massive accumulation and good manipulation on Nasdaq. There was a nice buy there. You should have bought it. Probably the Nasdaq buy probably happened at 4:30. Probably at 4:30. I would love to check that. Probably around 4:30. That's when it happened. We're gonna talk about the sessions as well. Probably around 4:30. No, let's go to the 5-minute time frame. We need to be more precise with Nasdaq. Top down analysis again, guys. The bias was on the daily time frame, right? Where's the bias? Wait, I almost lost the bias. So we are going on the 8th. But there was no liquidity in the market as well. The 8th. Wait, where's that line that I just placed? It's still loading. Oh my goodness. Is it even visible on the 5-minute time frame? Let's see. Yeah, it is visible. Excuse me, guys. Let's see. I know these videos are probably gonna be long, but we need to be precise with this thing. I can't see the line, but let's just go on the date. So the date is the 8th of December. So 8 December, 12 a.m. It's somewhere back there. So the New York session started somewhere right here. I think when the candles become big, that's when the New York opened. There it is, 4:30. There's 4:30 right there. There's a fair value gap. Perfect. There was a nice fair value gap entry right there. I'm gonna teach you guys the entry system, the ICT thingy, the one that I use, the information that I use from ICT's model. Basically, price was going down, down, low, lower high, lower high. Then we broke around 4:30, which is 9:30 a.m. in New York, right? It rallied upwards. What I mean by 9:30 a.m. in New York, that's when the New York session starts, or not even the New York session, that's when the New York Stock Exchange rings the bell, right? That's when the bell rings at 9:30 in the morning, meaning they are officially starting the session. So the bell rang right here at 4:30 p.m. this side in South Africa. What happened? We rallied, we broke the previous lower high, we created a fair value gap right there, or an imbalance. We created an imbalance right there because of all the orders that came flocking into the market on the 5-minute time frame. After creating that imbalance right there, we came back, we retested, we closed the imbalance, and we got a nice candle right there. Nice candle right there, which means the entry would have, this is the entry, this is an entry system, one of the entry systems that I use, one of them. Then the stop loss would have been 50 pips. I don't use a small stop loss on Nasdaq, bro. If it's a fair value gap entry, I use a 50 pips stop loss. Stop loss would have been 50 pips on Friday. You would probably still be in the trade right now. But if you are catching a 1:2 risk to reward ratio, you could have caught it, right? Yeah, there was a 1:2 risk to reward ratio in a matter of 5, 10, 15 minutes or 20 minutes or so, somewhere there. But I don't advise taking only just 1:2 risk to reward ratios. I advise holding trades. Maybe your stop loss, your take profit would be over here at a 1:4 at 200 pips, 200 points or whatever. I think it's 200 points. Your stop loss would be here. Your take profit would be here. Stop loss here. So once it starts pricing upwards, you just wait for this thing to push all the way there. It'll probably do it on Monday. It'll probably get there. Probabilities, guys. It can still take a loss, but probably. Those who went either 1:2, they might have made profit, but it depends on what you want. I would have wanted a 1:3 or 1:4, so I wouldn't be out on the trade right now. But let's go back on the daily. So Nasdaq is also interesting as well today. It's interesting. But I usually choose US30 over Nasdaq. But if you choose Nasdaq, you'll have fewer sideways movement. You'll have fewer sideways movement. That's one thing I know about Nasdaq. It has fewer sideways movements compared to US30. So Nasdaq, there is a buy. I think this December, that's the asset that's probably gonna have a trade. I think it's Nasdaq. So I'll be looking at Nasdaq on the 11th of December. Let's see. Maybe we might take another trade for the FTMO challenge that we are monitoring. Remember, we're monitoring this FTMO challenge, right? I have this EU trade that I forgot to put a take profit somewhere down there, and I entered late. There was a fair value gap earlier on. I should have entered up there, caught a 1:3 trade, but it is what it is. I'm hoping to close it when the market opens. The account is currently at 3% right now. £5 under 3%, but it's a £10,000 account. It's currently at 3%. You're supposed to hit 10%, right? And the risk is 0.5%. 0.5%. Over here with me, guys, we risk in percentages: 1%, 0.5% of the capital, 1% of the capital. But with this FTMO challenge, we'll be risking 0.5%. Then on the next phase, we'll risk 1%, depending on the strength of the setup, right? Over here with Nasdaq as well, there was a setup right here with Nasdaq. Oh, Nasdaq might be slightly better than US30 with these candlesticks. Nasdaq might be slightly better, right? Problem with Nasdaq is that sometimes it just runs, bro. Nasdaq really runs. US30 pulls back a lot, so you might get opportunities. Right here, it retraced. Momentum, strong momentum candle, bullish engulfing. The next day, accumulation, massive distribution for 3 days. 1, 2, 3. 3 days of distribution all the way upwards. Nice little setup right there. Yeah, good setup too. So might have taken 1 or 2 losses there. You might have. There's a high probability in a sideways market. There's a high chance of taking a loss or 2. So you need to take that into account as well. So there was a sell right there as well. Nice distribution. There was a sell here as well. So it is a good thing. Buy as well. After this strong candle right here, there was a buy, broke previous lower highs right there, closed with the momentum candle, strong wick right there, manipulation down there, momentum. The next day there was massive, oh, this one was glorious. This probably happened in the New York session. London, probably it dropped probably in the London session, and then the New York session you probably got an entry right there. You probably got an entry right there, or later in the New York session. Then it went all the way upwards. I'm gonna do a separate video for sessions because, as you guys probably see already, this video is probably long already on its own. This video is already long on its own. But let's go to that point. Where is that point? It fascinates me. Which session was it where we had that massive drop? Which time frame? The 9th of October. I think the 15-minute can reach October. Let's go to the 9th of October. Let's see. If the 15-minute doesn't reach, we'll go to the 1 hour time frame. But I really don't like back testing. I prefer forward testing, but we'll be forward testing together, so you guys can stay tuned to that. Forward testing using the FTMO account. 9th of October. There it is, right there. Oh my god, bro. The entries were just glorious. I can already see it from this far. Can you see right there? Resistance, resistance, resistance. Rejections, rejections. A lot of action happens in that level. There is a lot that happens at that point. If you see a region like that, you need to pay close attention to levels like that. Very close attention. And these are the times where you shouldn't be using a tight stop loss. You should measure your stop losses wisely. All right, let's say you entered somewhere there. 100 pips stop loss, I'm guessing. Probably 100 pips. Oh, even a good 70 pips would have worked. So a good 70 pip stop loss would have worked as well, right there. Was there a fair value gap entry? There is a fair value gap. Yeah, there is. It was retested. Created a fair value gap right there. It retested it halfway, then it read upwards. So you would have got an entry there as well. But you would have got an entry here as well too. So the entries are there on Nasdaq. Nasdaq is a good thing. Nasdaq is really good. So what time is it? What time did this happen? New York session. I'm 100% sure it's probably during the New York session. It dropped during Asia. Yeah, it dropped during Asia. It went sideways during the London session. Sideways during the London session, and then New York session 3:30. It was the New York session. That's where 3:30 right there. That's the New York Open. I can tell looking at a candle that that's a New York Open. You can see with the way it moves that okay. That was the New York Open. They pushed price down. They manipulated. That was the manipulation. They manipulated price. They hunted. They hunted a lot of sell stops right there. Hunted a lot of sell stops. There was sell side liquidity there. Hunted sell stops. Then what happened? Pushed price upwards in a very insane pace. Insane pace, bro. This is probably a 1:4, 1:5 risk to reward ratio. I think so. I think it's a 1:4. But let's check. Yeah, it's a 1:5. It's a 1:5 risk. I don't know how I can tell these things just by looking at them. Maybe it's because I'm now used to how Nasdaq and US30 move. I can tell from far. Okay, this is the 1:3. This is the 1:2 risk to reward ratio. Trade. So Nasdaq is juicy. Keep that on your watch list. So some of you can just focus on trading Nasdaq if you're gonna use the system that I teach you guys here. Choose between Nasdaq. I would say choose between Nasdaq and Euro USD. US30 is a little more advanced. Some of you might not be able to survive US30. Some of you might not survive US30. It might slaughter some of you. So maybe Nasdaq or Euro USD or GBP USD. Those ones specifically. You can do GBP, JPY and all those other ones, but the movement for me it's too erratic for the way that I trade. Way too erratic. I don't like the way those things move. It's way too erratic. There's a reason why I chose a major currency pair like EU and GU. Right, USD CAD as well, it's fine, but the sideways movements, well, USD CAD has too much sideways movements. I don't like that. So EU, GU, they tend to trend a lot. Nasdaq, it trends a lot, and it's tech stocks as well, so it won't hunt you too much. It will hunt you, but not as much as US30. US30 is really gonna hunt you, bro. It's really gonna hunt you a lot of times. So that's that. Then there's something that fascinates me. How big was the stop loss here in this portion here? Because it looks like there was a lot of hunting here. There was a lot of hunting, it seems. Nasdaq has its days. Sometimes the thing about Nasdaq, sometimes it's gonna take you out. If you have a tight stop loss, it's gonna take you out, and then it's gonna move in your direction. That's the thing about Nasdaq. So there was a trade right here. Good trades. 1, 2. It would have taken you out at break even. This one, you would have gone back inside here. Even if you took a loss there, you would have gone back, recovered the loss, and made more profit. Right over here, good trade there, good trade here. Nasdaq has a lot of good trades. There are few bad apples where you take those few losses here and there, like there you might have taken a loss there, anticipating that you might be buying, then it retraces, it hunts you. It would have hunted me as well, but it pushes back up. You would have been too afraid to enter, but I would have entered. Then it rallies upwards. So psychology, this is why psychology is important. You might get those times where you are hunted. They will hunt you. They will hunt you. You're not immune. You will have your days where you will be hunted as well. And you will be angry. You will be pissed. You will be heartbroken. But you must have the courage when you see another signal to come back inside. You go back inside. No revenge trading. It hunted you over here. You waited 1, 2, 3, 4 days. You waited 4 to 5 days. You waited an entire week monitoring the market, monitoring Nasdaq. Then after that day, the next few days you made profit. Not even few days, more than 10 days. For more than 10 days, you were just riding it upwards, right? You wait 1, 2, 3 days right there. On the 4th day or 5th day again, ride it upwards. Sometimes you wait for a week without a trade. That's the crazy thing about the market, guys. You wait a long time. That's why people end up focusing on trading a lot of things. But I believe trading a lot of things has a huge drawback. It has a huge drawback, right? Be careful. Don't trade a lot of things. Don't focus on too many assets. You must be willing to wait. Like, you must wait. You can wait 5 days, 4 days. As you can see, I'm showing you guys that there are some moments where you wait 5 days for the next trade after taking a loss. Imagine after that pain, you wait 5 days. I know the pain, I felt it. So you need to be ready for such things, guys. But anyway, I'm spending too much time on this advanced candlestick stuff, man. Spending way too much time. But now, at least since I was doing this video, I got the chance to open Nasdaq. I wasn't gonna open Nasdaq, so thanks to this video, I managed to catch this with Nasdaq to see what is happening. I thought I might not get any trade the entirety of December, but this gives me a little bit of hope. I might get 1 or 2 entries and leave December with this account maybe close to 5% or past 5%. But anyway, that's it for this video. I don't know what we're gonna do in the next one. We still need to do risk management, psychology, but we're still doing advanced candlesticks. And I don't know if I can break it down anymore. That's what I'm trying to think about. Can I explain it a lot simpler than I've already explained it? That's what I'm wondering now. Right? Are there other forms of candlesticks to pay attention to? There is the shooting star candle. But it's obvious because I told you guys it's manipulation. Like here, this shooting star candle right there. Was sideways movement, shooting star candle. You see where there are a lot of wicks like this. It shows you that there is a key level there. So if there is a key level there, you obviously anticipate price to move in the opposite direction. Or if it breaks that key level, you anticipate price to rally upwards. But here, it went in the opposite direction and gave us one of our usual patterns, one of our usual candlestick patterns, which is momentum to the downside. Yes, I understand the wick to you guys is big because there's rejection there, but momentum, rejections, momentum, engulfing candle, selling the next day. Or even you can wait for it to break past that region on the lower time frames. Once you're in the lower time frames, when it breaks past, it retraces, you sell it off. You sell it off, get a 1:2 or 1:3 risk to reward trade. But that's it for this one. I don't want to make this video too long. I don't want it to be too long, but so that's that. So basically, when it comes to the way I trade, guys, I pay attention to each candlestick. What is each candlestick doing? I pay more attention to the candlesticks than I do with the entire structure of the market, right? Sometimes I can even trade against the trend, but because the candlestick is strong, like there is a lot of momentum. For example, over here, right, we're in a bullish market, but if the momentum is strong like this, I might look to sell the next day. Like over here as well, I might have been looking to sell that next day. I might have been looking to sell. I might have got just a break-even trade, or it might have been, or I might have been taken out 2 days or 3 days later. But sometimes I place importance with these candles, with candlesticks, individual candlesticks. Like you need to read what is a candlestick telling you. What is this thing saying? What is it saying? What's the body saying? What's the wick saying? What happened the day before? What happened 2 days ago with each candlestick? That's what I pay attention to, and that's what I know it gives you an edge as well. It gives you an edge because you're also reading current price. You're reading current price, like what happened recently. You see, so that's it for this video. I think I should probably stop here before it becomes way too long, guys. Before it becomes way too long, and but anyway, the longer it is, the more information it's going to have, and probably gonna benefit someone. And if you guys try looking at the market this way, looking at things like Nasdaq this way. I emphasize Nasdaq, US30, Euro USD, GBP USD. Don't stray away from those ones for now. I emphasize those ones because I have spent a lot of time testing those ones specifically, right? So that's it for this advanced candlesticks part 2. And then I think now the next video I want to do is the risk management video. I'm not sure between the risk management or the psychology video, but I did touch on psychology with this video, so you guys must be good. So stay tuned for the next video, guys.